Well, the Federal Reserve meets this week to decide whether to raise or lower interest rates.
Fox 26's business reporter Tom Zizka is live tonight with a look at what the central bank will consider in its decision. Tom.
Rashi, Caroline, this is all about stubborn inflation that has made life generally more expensive for all of us. The Fed interest rate that we're talking about sits at 5.25% to 5.5%. It's designed to make borrowing more expensive and to cool demand in the economy. A lot of people look at Wall Street's ups and downs and think that's the economy. Instead, the Fed is looking at factors that affect us every day. When the Fed started raising interest rates, there was an expectation that jobs would be lost because it would be more expensive for businesses to operate. But the latest jobs report of 297,000 new positions was a mixed bag. Certainly good news for people who are getting a paycheck, but most of those positions were part-time. And while the unemployment rate did tick up to 4%, that still remains historically low. Understandably, the Fed will spend a lot of time talking about and thinking about what we do with our money. We have a consumer-driven economy where 7 of every $10 in it comes directly from our pockets. So they'll look at retail sales. What are we doing with our money? And the last 2 readings on this have been unchanged, no more, no less. There's also a report that looks at consumer sentiment, how we feel about things. And generally, we feel okay. Next, the central bank will look at what's going on with real estate, because buying a home is typically the biggest purchase a lot of people will make, and this particular sector is still getting a kick in the pants. Mortgage rates sit at around 7% right now, and home sales are just over half of what they were at their peak in 2005, in part because inventory is low as people don't want to move and let go of the sweet deal they may have, which pushes prices higher for the homes that are on the market. It all leads to the 2 primary indicators of how the economy is performing. Gross domestic product, GDP, is a measure of the nation's goods and services. It measures economic output, and it's falling, about a third of what it was a year ago. And then there is inflation, now at 3.4%, better than its high of 9.1%, but well above the Fed's target of 2%. Experts say for now, the economy is just doing okay.
There's no reason to cut rates right now because there's not enough evidence that inflation is moderating as fast as they would like it to.
So there is 0 chance the Fed will lower interest rates when they come out of their meeting on Wednesday. The next opportunities would be July, September, probably not then. They'd likely wait, conventional wisdom says, until the meeting in November to decide that so that they don't affect the upcoming election. Watching Your Money tonight, I'm Tom Zizka, Fox 26 News.